Let's dive right into this explainer. Today we're looking at a true Indian tech giant, an absolute staple of the Nifty 50, and how it's navigating some pretty intense market pressure with a radically new strategy. We're talking, of course, about Infosys. Now, if you track the tech sector, you know it has been a deeply turbulent ride lately. But what actually happens when a legacy IT services behemoth completely rewrites its playbook to put artificial intelligence at the very core of its business? Well, let's unpack exactly how that strategy is playing out in real time.
We've got to start with the overarching challenge that really set the stage for this massive pivot. Over the last year, Infosys stock suffered a pretty dramatic 34% decline. Think about that for a second. For a global leader in technology services and consulting, a company with a market cap that usually commands a massive premium, a drop of this magnitude is a serious code-red wake-up call. It's exactly the kind of number that forces a boardroom to completely rethink its trajectory.
But this steep drop didn't just happen in a vacuum, right? It totally reflects the harsh reality of a super cautious macroeconomic environment. Across the board, we've seen incredibly subdued discretionary spending in the tech sector. Clients have essentially been hoarding their cash, delaying big, ambitious IT projects, and demanding way more value for every single dollar spent. It's a classic squeeze. And even industry heavyweights like Infosys absolutely haven't been immune to these economic headwinds.
So the fundamental question we're exploring today is this: how does a company of this sheer scale engineer a turnaround when the chips are down? Because you can't just cut costs to dig your way out of a 34% hole. You literally have to innovate your way out. You have to find a brand new growth engine. And as we're about to see, Infosys firmly believes they've found exactly that.
Section 1. A surprise Q1 rebound for fiscal year 27.
Amidst all that market pessimism and the cautious spending environment we just talked about, Infosys dropped a quarter that made analysts instantly sit up and take notice. They showed consistent, undeniable double-digit growth right across the board. Check out these figures. Consolidated net profit rose 12.3% year-over-year to 7,769 crore rupees. Revenue from operations jumped an impressive 14% to 48,211 crore rupees, and basic earnings per share climbed nearly 15%. This right here, this is what drives long-term stock price appreciation, and it really shows the underlying engine of the company is roaring back to life.
And it gets better because beyond just that top-line revenue, these metrics brilliantly illustrate a deeply resilient business model. Their EBIT margin actually expanded to 21.1%. Let's be real, in a tough economic environment, expanding your margins means you have serious pricing power and highly disciplined operational execution. Their CFO even noted that this, combined with their strong cash generation, gives them the ultimate financial flexibility to jump on emerging opportunities.
Section 2. The Catalyst, an AI-first strategy.
So, what actually drove this Q1 beat and that 14% revenue spike while clients were supposedly pinching pennies? It all comes down to this absolutely wild stat. AI actively generated 8.2% of the company's total revenue. Now put that into perspective. When your total quarterly revenue is over 48,000 crore rupees, 8.2% translates to a massive, tangible stream of income driven purely by artificial intelligence services. AI is officially no longer just a cool pilot project tucked away in an R&D lab somewhere. It's paying the bills.
The powerhouse behind this revenue slice is Infosys Topaz. This is their dedicated suite of services, solutions, and platforms leveraging generative AI. Topaz is essentially their vanguard. It's this highly differentiated enterprise AI value proposition that's actively helping them steal critical market share. It's the golden ticket that gets them in the door with CEOs who know they desperately need AI but have absolutely no idea how to securely deploy it across their old legacy systems.
And outgoing CEO Salil Parekh confirmed this exact dynamic during the latest earnings call. He confidently stated that their AI investments are translating directly into client confidence. To use his exact words, AI momentum is rapidly converting into revenue. It's not speculative anymore, guys. They've established strategic partnerships with all the heavy-hitting AI companies, really positioning themselves as the ultimate go-to partner for enterprises trying to survive this massive technological shift.
Section 3. Securing major global deals. The $3.6 billion win.
That client confidence we just mentioned, it is directly converting into massive, measurable corporate contracts. In just the June quarter alone, Infosys secured a staggering $3.6 billion in total large order bookings, meaning deals valued over $30 million. And look at the diversity of these wins. You've got Global Foundries in the semiconductor space, Sterling Bank of Asia and Finance, and IHH Healthcare, which is a massive hospital chain based in Malaysia. By locking in these globally recognized names across hardware, banking, and healthcare, Infosys is definitively proving that their Topaz AI solutions are universally applicable and in extremely high demand.
Section 4. Horizon, a new era of leadership. Now, right as this AI strategy is really starting to pay off, Infosys is preparing for a massive corporate transition at the very top. Changing CEOs during a pivot like this is incredibly high stakes, but looking at their timeline reveals a very deliberate, smooth handover. Back in July 2026, right alongside these earnings, they appointed Ashish Kumar Dash as CEO designate. Now, he doesn't officially take the reins until April 2027. That gives him and Salil Parekh nearly a full year to work side by side, ensuring absolutely no momentum is lost before Dash begins his 5-year term. It's a textbook transition strategy.
Chairman Nanda Nilekani's quote perfectly captures why they went with an internal leader to navigate this wild era of technological disruption. He emphasized the need for a leader who can drive, quote, bold transformation while perfectly preserving the customer trust that defines Infosys. Dash brings this deep, intuitive understanding of their clients and their people. And honestly, that is absolutely crucial when you're trying to fundamentally rewire a massive company's offerings around AI.
And Dash's own words make it crystal clear. He plans to aggressively accelerate this AI-first trajectory. He fully recognizes that AI is fundamentally reshaping how businesses create value. He also pointed out that Infosys is beginning this next phase from a position of enormous strength, with a really clearly articulated strategy. The message to the market is undeniable. The leadership might be changing, but the obsession with AI, that is only going to intensify.
Section 5. The FY27 Outlook. Tempered, but strategic.
So, with the new leader warming up in the bullpen and those killer Q1 results in the bag, what's the company actually projecting for the rest of the year? Well, despite the Q1 beat and $3.6 billion in new deals, management is playing it cool. They're taking a distinctly cautious approach. They actually revised their constant currency revenue growth guidance for the full year, lowering the upper end of their projection from 3.5% down to 3.0%. This slight narrowing really reflects those persistent macroeconomic headwinds we talked about earlier. It's management acknowledging that the global economy is still pretty unpredictable, and we just aren't completely out of the woods yet when it comes to client spending habits.
But here is the kicker. They are confidently maintaining their operating margin guidance right at that 20 to 22% sweet spot. This is a vital takeaway. It means that even if revenue growth is a little slower than their most optimistic prior projections, they fully expect to stay highly profitable and operationally efficient. They aren't just out there sacrificing their margins to blindly chase revenue.
Which brings us to the final thought to leave you with today. The stock is still down significantly over the last year, sure, but with Q1 showing a massive 14% revenue jump fueled by that 8.2% AI-driven revenue slice, the pieces are clearly in motion. So, the ultimate question is this. Will this immense AI momentum, powered by Topaz and led by a brand new CEO designate, actually be enough to sustain a long-term turnaround against global economic pressures? Can they successfully transition from a traditional IT services company into a true AI powerhouse? It is a fascinating evolution to watch, and one that holds major implications for the entire global tech sector. Keep a close eye on those margin numbers in the coming quarters.